can start. Good day, ladies and gentlemen. We have a truly international conference today. We have representatives from many countries, including Tokyo Stock Exchange. So just imagine, interest is very great about our event. On behalf of founders of Latvia's most valuable top 101 enterprises, Nasdaq Riga and Prudentia, we are pleased to welcome you all to this top 101 debate. And the name of the debate is How Listing of SOEs Benefit Economic Development. My name is Daiga Auziņa-Melvalksne. I'm head of Nasdaq Riga. Together with me here is Kārlis Krastīņš, CEO of investment bank Prudentia. And we are delighted that so many of you are here today. Here we have policy makers, politicians, capital markets experts, investors, companies, media. It all means that this topic is very important and it is good time to discuss. Our intention today is to promote a debate and facilitate a better understanding among all mentioned groups what listing of SOEs, what kind of benefits it brings to national economies, what benefits it brings to society at large, how it promotes countries' economic development, facilitates foreign and most importantly also domestic investment, enhances countries' international reputation. So now I give floor to Kārlis.
Jā, Daiga, paldies, pāris vārdus latviski. Paldies visiem, kas tiešām esat ieradušies. Kapitāla tirgi un finanses ir starptautiska lieta, tāpēc darba valoda būs angļu. So I just said a few words in Latvian. Yeah, thank you again to everybody which is here. Really, it's good to continue this that we are doing with Nasdaq together, trying to promote capital markets. It's the fifth conference or debate that we are organizing. We hope really that this is a good moment because we have new government. No elections are coming in the nearest future, only in May European Parliament elections. But after that, I hope our politicians and stakeholders will be more brave enough to not to talk, but as our colleagues in Estonia, to do as well something. And if you look to Baltics, we are actually in good shape. Economies are growing. So M&A market is booming, like 21% of number of deals completed in last year. It's good increase, and somehow there is no objective problems here in Baltics to have good and developed capital markets, but somehow we are slow. I hope in this room there are no slow people, but very fast and smart. And of course, I think it's talk, not only about the problems, but about the opportunities that are. And we hope that those gentlemen that agree to come to Riga and share their experience about their knowledge in other countries, here in the Baltics as well in other countries in Europe. This is good information for us here in Riga or in Tallinn and Vilnius, just to learn, to hear and maybe use it in future for ourselves. So thank you again for everybody, and let's start.
Yeah, our event will have two parts. We will have 3 keynote speeches, and directly after that there will be a panel debate, which will be moderated by Kārlis. So, and the first speaker will be Hannes Takač from EBRD, and Hannes has a very extensive experience in capital markets. So let's give floor to Hannes. Hannes, please.
Can I keep that? For a moment. Thank you very much to speak about that quite exciting topic and also sensitive issue. What I would like to do, I would like to start with a picture. I was around 12 years ago with a family on holidays in Croatia. And my son was saying, "Daddy, what are doing all the people in front of a bank?" And normally, if people are queuing in front of a bank, it's not a good sign. In this case, it was quite interesting. It was the privatization of a state-owned enterprise. It was the privatization of Hradski Telekom. And people were queuing, retail investors, to get a stake in the company. And that was really exciting from me coming from a capital market perspective and seeing what the demand was, because the government at that point of time decided to privatize two companies. One was INA, an oil company, and the second one was the telecom operator, Hradski Telekom. And as you can see, the demand by far exceeded the offering size of the country. And what was really tremendous is the demand from side of the private investors. Private investors knew the brand name of a local company. They said, okay, it's one of our companies. It's one of the pearls of our economy. I would like to become stakeholder of that as well. So it really helps to create wealth in the population because they saw an opportunity, they were able to identify with a company, and they were willing to invest. And INA was the first one which became privatized, and afterwards it was followed by the telecom operator. And you can see here that the demand even increased. You had a retail demand of 1.7 billion euro. And having in mind that Croatia is quite a small country, it shows you how attractive the stock was and still is. Why did I start with that example? Because it's all the time good to know there are success stories out there, and it was to the benefit of the population. It was not family and friends who owned the company afterwards. It was a wider audience. It was institutional investors as well as private investors. Now, what are the reasons for a government normally to consider a privatization of a state-owned enterprise? Or what are the expected benefits on going to that road? Of course, the first one is increase the performance and the efficiency of a company. In some cases, for example, there is a fear that if you, for example, privatize an energy company, that tariffs will increase dramatically because the private investor will just squeeze out the money of the people. That is not the case. What we have seen, based on that companies are run in a much more productive and more efficient way, they were in the position to lower even the tariffs. So the opposite is the case, which is not expected by investors, because everybody fears that the capitalist will take as much money they can, not seeing that the companies is acting in a competitive environment, meaning if you're not satisfied with the energy provider, you may take another one. And that is really the competitiveness will be one of the self-regulatory mechanisms to ensure that tariffs will stay at a level which is acceptable for the population. Another point is, of course, improved corporate governance. It will help if you have changing political parties taking position, that the management is focused on the task to improve the performance of the company and to improve the service level for the clients. And practical experience has shown that that can exactly be achieved through a privatization of state-owned enterprises. But of course, not every state-owned enterprises will be the right one to be privatized. There has to be a proper selection process in place as well. And additionally, it has an impact on the revenues of a state. It will have a one-time revenue based on the fact that you get money for selling your stake. But at the same time, when you expect that the company performance will be much higher than before, you will increase your tax income as well. And what was quite interesting is that it frees up also resources for the state. And if you had a chance to watch today in the morning the news, there was quite an interesting message saying the French government is considering to privatize Paris Airport, one of the national monuments. And it's not privatizing it to take the money and reduce the debt. Their aim is to put it in an innovation fund, the proceeds of a privatization, and help to create the future economy for France, which would secure additional tax income at a later point of time, which is quite a timely move, I must say, by the French government to consider the conference here to make the announcement, so we should be very grateful. Transfer of the commercial risk to the private sector, that is a very important part. Keep in mind the airline industry 10 years ago. 10 years ago, the airline industry was highly profitable, and everybody was saying, we have to have our own airline. Now, margins were shrinking, and you saw a lot of bankruptcy cases for airlines. In this case, governments who privatized the airline beforehand were quite happy not to own them anymore. So you can move the commercial risk when it has a tremendous capital markets development impact. Specifically for smaller countries, because in smaller countries, you lack normally larger enterprises which are listed locally and which can attract foreign investors. So you need so-called magnet companies. And what are the impact of such companies? If you are able to attract investors to a country based on the fact that you have a large-scale company listed, you normally see a so-called spillover effect. An investor who has a good experience with an investment in a country may consider also investments in other companies which are listed there. And that are normally private sector companies. So with one initial public offering, you may be able to attract investors also in other companies. And I will show you afterwards an example that that is really the case. And of course, it will be a wider distribution of wealth, having in mind that normally you privatize companies which have a potential for future growth and good performance, and you let participate the population of a country in such an entity, you will help them to create wealth if it's the proper enterprise. Meaning the selection of a state-owned enterprise you may consider to partly privatize or to fully privatize is very important. Now, how can IPOs contribute to securities market development? It's on one hand, it provides diversified investment opportunities for the investors. Currently, they are stuck within a specific set of companies which are listed, but when you increase the number of companies and the industries which are listed on the stock exchange, you help investors to build up quite a nice local portfolio as well. And it helps also the local pension funds and institutional investors to find investment targets in their home country and not only abroad. So it keeps some of the money in the country to support economic development here where you need it. When you have the chance to increase the number of retail investors, normally with a part privatization of a state-owned enterprise, you will get a lot of media attention. And media attention has also an educational impact, meaning that people will say, okay, what is an IPO? What can I benefit out of it as investor? And what will be the wealth perspective for me if I go into such an instrument? We have seen that many times, for example, when telecom operators became listed. In Austria, there was the People's IPO program for Telekom Austria, where everybody got a voucher to buy up for a discount in the telecom operator with an additional offering saying, if you keep it for 3 years, we will give you 1 share for free for every, I don't know, 10 or 20 shares you have. What did it do? It created a new scheme of private investors. And the performance of the stock was well as well. So it really helped to create wealth, as mentioned before. It helps also to attract international investors, because smaller countries, like Austria is one as well, for them it's very hard to come onto the radar screen of investors. Everybody speaks about Apple, everybody speaks about Google. Nobody speaks in reality about smaller stocks which are listed in countries which are smaller in size and which normally have a different company landscape than the larger ones. But nevertheless, also the medium-sized companies and smaller-sized companies need investment capital. And they cannot only rely on the local investor base, they are also very keen to have international investors entering the market. And the state-owned enterprise which is listed can fulfill that, because it will bring the country on the radar screen on the investors, they will invest it and will contribute to the economic growth of the country as well. Now, another problem, and that is specifically true for Latvia, is that we see active investors. Active investors are those which are stock picking and investing into stocks directly. And then you have a higher and increasing number of passive investors. What are passive investors doing? They're investing in funds which are following indices. And if a country is either not included in an index or only to a small portion, you will not get passive investors in the country. And we as a bank have currently an initiative going on to help the three Baltic countries to have an own index, because as a single country, you're not qualifying for developed market indices. And we are currently trying to find a workaround where you create a market really focusing on a Baltic asset class, which has a number of highly interesting stocks already listed, or others who may be keen to attract capital through the capital market. And that will be very important to increase the passive investor base here as well. And as mentioned before, the positive spillover effect on listed companies. Coming back to my queuing example in Croatia before, what happened after the 2 IPOs? 7 additional IPOs followed immediately afterwards. And all of them were oversubscribed. So that means the listing of a small portion of state-owned enterprises had a massive impact on the private sector companies looking for raising capital on the local stock exchange. And take, for example, Atlantica Grupa, where we as EBRD invested also in the secondary public offering, and we are still shareholder with 2% in the company. And you see here, they offered 96 million, but the demand was 4 times, it was 400 million. At the beginning, the company were only considering to allocate between 20 and 25% to private investors. But based on the seen demand, and also having in mind that the investors are also clients and consumers of the products produced by the company, they increased the share to 30% private sector allocation. So that's a very good example how the private sector, through one state initiative and government commitment, was able to benefit as well as the state-owned enterprise, which was listed. Now, what is the success if a government really considers to list parts of a state-owned enterprise? I think the selection process is the most crucial part of it. Finding the right enterprise where the government can say, okay, I can afford to privatize it either fully or partially, and the company must be the best prepared one prior to the IPO. And here I think the rule is time is more important than money. That means if it may take a little bit longer to prepare a company, it's worth it, because on one hand, the government will get out a higher value through the privatization process, and at the same time, the investors will benefit from it because they get a proper governed company with a proper strategy in place. And there may be already now SOEs in the country which are already fully prepared, and there may others which may need a couple of years to be in that position. So don't rush, select the right company. That would be what we have learned from our experience in our country's operation. Another important part is the IPO allocation. Are you looking only for institutional investors, only for domestic one, for international one? Would you like the population to participate in it? What we have seen in the long term, it's very important that the population can participate in the IPO of a state-owned enterprise, because they should be able to participate in the wealth creation and in the dividend policy of such a company. And I think we will hear afterwards from Port of Tallinn how they were able to attract quite a, I would say in my opinion, quite large retail investor base, which see a good opportunity for them to get higher returns when putting their money into a deposit on bank level. And of course, the listing place. The listing place is very important when one of the strategic elements of a privatization is also to help develop the local capital market. And in my opinion, and that's my personal opinion, it should be on the agenda of the government to have a view also on the local capital market development, specifically having in mind the positive spillover effects on the private sector. And if you help the private sector to improve their access to capital, that means increased tax income in the future for a longer period of time, which help to finance social projects which the government may have in mind. Now, another good case study from Central and Eastern Europe is Poland. Poland really did a strategic approach when it came to the privatization of state-owned enterprises. And they sequenced it over a couple of years, helped also to develop the institutional investor base and the pension fund industry. So they were coming from a supply side, bringing companies to the exchange, and at the same time they were developing the supply demand side by improving the pension system as well. And what happened between 1992 and 2014, Poland was one of the fastest growing countries in the region with 4.2%. And as you can see, the same like Estonia, but Estonia was coming from a different angle. And Latvia with 4.1 was also not doing bad. It was doing very, very well as well without privatizations. But now you can accelerate that. And the forecast for the growth in Latvia for the coming years, according to Latvia, for Latvia by IMF, is 3.2%. And to support the growth, of course, you have to open up financing channels for your companies. And what is really interesting to see is that Latvia will contribute 0.1% to the global growth. Can you imagine it? Latvia, 0.1 global growth contribution, which is really quite an achievement. And you would be able to accelerate that through improving the access to finance even furthermore. And what was one of the key elements of a strategy of Poland? It was to support capital market development and to create a vivid market which also can secure the liquidity you require to attract investors. Now, another example here where we as bank were able to participate was the privatization of a cargo freight company, transport sector. Sorry, no, that's the bank one. Transport comes later, BKO, which was surprised by itself by the large demand seen by retail investors. You see here in the different phases, the initial phase said, okay, we would only have to have a retail participation of 18%. When in the pre-book building phase, they saw, okay, there is more interest from the private sector, increased it to 30%, and finally the allocation was 44% to the retail investor base. So a tremendous success in that area. And another one will follow after I make a little bit promotion for EBRD here. What we have seen is we are working in this area since 1991. So we collected a lot of knowledge in this area within the bank. We have specialized teams which are really focusing on pre-IPO, IPO investments, or even financing of state-owned enterprises in the way to become a privatized company. And we have seen also in the latest involvement from us that experience is very important. And we are more than happy to share the experience and open up the knowledge because we see that as one of the cornerstones to develop the private sector and to really help to support the growth of the economy in a country. So we have also a toolbox of various financing instruments in place as well as technical assistance where we can support companies to go that route. And that is one of the examples. That's a cargo company in Poland where we participated in the IPO. We invested 37 million, and the total volume was 465. And we helped to improve the corporate governance, which was very important at that point of time for the investor base. Because every investor would like to see that there is a proper corporate governance structure in place to ensure a proper management and control of the company. And additionally, what is very important, that the company meets environmental standards as well. That is something we are taking care as well in our shareholder agreements normally. So that is one of our investments. Thank you very much, and I hope there are very interesting parts, and if you have any question, please don't hesitate.
Thank you, Hannes. There will be, if there is immediate question, of course, we can take it. If not, Hannes will later also participate in a panel, so then we can have it as a part of panel discussion. So thank you very much, Hannes. And the next speaker will be Pavel Šaja. Pavel is partner of Sherman & Sterling and also has very extensive experience in bringing companies to the market. So Pavel, please, floor is yours.
Thank you very much. I'm Pavel Šaja. Welcome, everyone. It is an honor to be here in this beautiful city today. I will be talking about IPOs, but looking more at the anatomy and lifetime of a capital markets transaction. I'm told I have maximum 20 minutes here to do it, so it will be a little bit like your holiday hop-on, hop-off bus tour. You will see quite a lot in a relatively short period of time. Now I'm trying to, how can we make it full screen? Yeah, okay, that's full screen. I would like to keep this presentation as practical as possible, so I've chosen one recent transaction that I will go through here. It's the IPO of state-owned company in Slovenia, Nova Ljubljanska Banka. You may have heard it was one of the big IPOs last year in Europe, in the FIC industry, a very successful transaction. The reason why I think it's appropriate for this audience is twofold. First of all, it's an IPO of a state-controlled company, and second, Slovenia in some ways similar to Latvia, looking at the size of the economy and the market. So 670 million IPO of Nova Ljubljanska Banka completed in December last year. Let's, oh, no, not this way, this way. Let's start with what I call a typical timeline. For those of you who have not done it, have not done this type of transaction, let's focus on the key points. The key points are in the middle. Let's starting with the kickoff meeting and the milestones that follow. One important part, of course, in every IPO is the analyst presentation, the pre-IPO research, a very customary and very important part of the price discovery mechanism, very common in Europe. For those of you who are familiar with the US model, the pre-IPO research doesn't exist in the United States for many reasons. They use the buy-side research on the basis of publicly available information as opposed to the pre-IPO research. Having said that, the UK model has recently changed in July last year. It is becoming more similar to the US model, and the UK regulator is now giving access to unconnected analysts as part of the IPO process. The intention to float, so this is the first message to the market that you are planning an IPO. Of course, it's the big time. Everyone should be ready by that point in time. This is also the time when the research is published, and what follows is that blue line on top of intention to flow is PDIE, which are meetings between the research analysts and analysts who prepared research and a selected number of investors. What follows later is the price range prospectus. Of course, you need to come up with a price range for your offering. Now, this applies only to public offerings in Europe. If there is no retail component, if you don't want to go with an approved prospectus, there are, of course, other ways, and you can use what we would typically call the Pathfinder type of prospectus. Roadshow follows the price range prospectus. Of course, within the price range, you need to get to a point where you agree on the final price at which you will be selling the instrument. and this happens at pricing. You see in the blue or orange boxes below how the share price of NLB has developed from the time of the pre-IPO research through the price range prospectus, through the pricing. Now, pricing for bankers, and please bankers in this room don't take it the wrong way, pricing is when the transaction stops for bankers, but for lawyers it still continues. There is still quite a lot of plumbing to do to get the transaction over the finish line, in particular to make sure that the transaction settles. And there may or may not be challenges. My personal experience focusing on the CE region is, let's say emerging markets, frontier markets, is that there may be challenges. I can tell you anecdotes and stories. My recent transaction from Hungary 2 years ago, without changing the laws, which we had to do and lobby the parliament to change the laws, the transaction, the IPO would settle on a T+25 basis, which was not really favored by anyone in the group. But we did successfully lobby the parliament. The parliament changed the laws to make this transaction possible, and we settled the transaction on T+2 basis. So that's closing, and what follows after closing, of course, it's now allowed under the market abuse regulation, is the stabilization. It's the short period of time of 30 days when one of the banks will carry out stabilization in the market, effectively buy shares if the share price goes below the final price. Of course, you cannot stabilize if the share price increases. That would be market manipulation. So in our case, when you look at the share price, you will see with NLB prices at 51 euro. Shortly after closing, the share price went up. In that case, the banks decided to exercise the overallotment option, the green shoe option, and they closed the overallotment part of the offering. And at that point in time, the share price was 57.2. Now, many people ask me how long it takes to do an IPO, and maybe going back to the point that we just heard, a lot depends on how prepared the company is, right? The corporate governance structure is one point, but there are, of course, many other aspects that are relevant, right? The financial statements, how the company is organized internally, the internal controls, and a few additional points which will be relevant from a due diligence perspective. The blue line, the orange line that cuts across the whole line is due diligence, right? In any capital markets transaction, due diligence plays a very significant role. It's something not only for lawyers. The banks these days are, at least in my experience, are much more focused on due diligence, not only the AML, the sanctions, part of the due diligence process, which is driven by regulations, but more the due diligence about the company. Right? Now, the deal structure, we'll talk about this briefly in a second. It was a Rule 145 regulation as offering. I don't know if those terms mean much to you. Rule 144A means effectively private placement to qualified institutional buyers, which is pretty much the equivalent of qualified investors under the prospectus regulation, but QIPs in the United States. Regulation S, which effectively means it's the US way, the American way of looking at regulation worldwide. Any transaction that happens outside of the United States, from the US perspective, is going to be considered as a regulation S transaction. Most of the transactions these days above a certain size will be structured as a Rule 145 and regulation S offering. It we'll talk about it in a second. Public offering in Slovenia, again going to the point that we mentioned previously, local retail offering locally, plus offering of depository receipts and listing on the London Stock Exchange. Looking at the syndicate very briefly, you will see a number of international banks at different levels, and you will see also a domestic bank. Of course, this is required because of the retail portion. Now, the background very quickly, of course, it was an IPO of a state-controlled company. This process was driven in this particular case by the commitments to the European Commission. You may well know the Slovenian government was requested to bring NLB back to the public markets by the end of 2008. There were quite a few attempts, and the last attempt last year was successful. It took in total 5 months. This is in line with how much time we would expect for a transaction of this type, 5 to 6 months. I mentioned trading on the Ljubljana Stock Exchange and the GDRs on the London Stock Exchange. It was one of the largest IPOs last year in Europe, definitely the largest ever IPO out of Slovenia, and the first IPO in Slovenia in 10 years. And we had the privilege to work on this transaction. Now, we talked very briefly in the previous session about listing, right? Of course, looking at your listing options, you have a number of alternatives which you can choose, right? You can list locally, and this is driven by the points that we heard about the previous session. You can go for dual listing locally and elsewhere outside of your home country. This can be London, but this can be Warsaw, or this can be United States, whatever you choose. You can do foreign listing only, and certain companies, probably not from Europe, but from outside of Europe, decide to do it this way. And in a separate category here is the NASDAQ and NYC. And the reason why I mentioned NASDAQ and NYC is because of what we saw last year in the market, which was driven by how the stock exchanges in the United States performed versus European stock exchanges. Approximately mid-half year, we saw quite a lot of interest and questions about listings in the United States. Single listings, dual listings, different structures, and that was driven mainly by the expectation of valuation in the process. NLB chose the dual listing structure, the local listing, as I mentioned, on the local stock exchange, and the GDRs. Now, the listing venue is, of course, one point. The other point that you need to bear in mind is the offering structure, right? Now, those 2 points are related, but they are not the same, right? I always say that from my perspective as a lawyer, I tend to be listing venue agnostic, because we can structure an international transaction which is listed locally. The Port of Tallinn is one of the examples. It can be a dual listing, but those 2 points are separate. I mentioned Rule 144A offering versus Regulation S offering. The home regulator under the Prospectus Directive, that's an interesting point these days, and again, I could tell you a few anecdotes. You may know under the Prospectus Regulation, the competent regulator for the approval of the prospectus is the regulator of the country where the company is incorporated. So in the case of NLB, it was the Slovenian regulator. Of course, there was one prospectus which covered shares and GDRs. Of course, the initial question, given the lack of experience of the home regulator of the GDR structure, was, why are you asking me to approve a prospectus for listing of GDRs on the London Stock Exchange, right? And why don't you go to the UKLA in London and ask them to do it? Actually, you cannot. That's what the prospectus regulation says. I also worked on the planned IPO of Cittadella Banca here a couple of years ago. Interestingly, we got the same question from the local regulator. The local regulator here was very open-minded, very helpful, very keen to make the transaction happen. But of course, one of the first questions was, why GDRs, right? Why are you asking me to approve those? Settlement and stabilization mechanics, and I think this goes to what I would call the plumbing behind and the infrastructure. Of course, certain countries will be easier, certain countries will not be easier. Oftentimes what you see in this part of the world is that the settlement systems are not connected to Euroclear, so you need to come up, as was the case in Slovenia, you need to come up with a structure that allows you to settle the transaction timely by using different settlement systems. Stabilization, again, just please bear in mind that you have 2 types of instruments listed on 2 stock exchanges, so you need to align the stabilization efforts and activities in the market. And of course, banks do it, banks know how to do it. They are also subject to reporting obligations for any purchases in the market. Rule 145 regulation as, just very briefly, why is it important? Of course, I'm not a banker, so I will not speak here for the banks, but once you exceed a certain threshold, there is a question of building the book and demand, right? In my experience, most of the banks will suggest the Rule 145 component of the transaction, just to make sure that you will be able to tap the US demand, the US qualified investors. Again, this is not a public offering in the United States. You are only dealing with big boys, qualified investors. QIPs are defined roughly as institutions that have over $100 million of assets under management, so big insurance companies, big funds, and so forth. The biggest transactions from CEE, including NLB, the planned IPO of Citadele Banca, Port of Tallinn, were structured as Rule 145 transaction. And of course, the question that we always get is, what does it mean in practical terms? How does it translate into how you draft the prospectus and how you structure the offering? From a 30,000 feet perspective, I would say that the disclosure standards for the prospectus in Europe and in the United States are similar. They were all enacted under the common set of disclosure guidance issued by IOSCO late 80s, and they were implemented in two slightly different ways, the US model versus the European model. Now, in Europe, it's the prospectus directive and now moving toward prospectus regulation, whereas in Europe, it is the set of rules issued by the SEC under the Securities Act. Very detailed rules, a slightly different approach to regulating capital markets, but both systems works. The underlying principles will be the same, right? Both systems are disclosure-based system. What it means that the prospectus will be your liability document, is the legally required document, and also the document to which the liability will attach. But in terms of details, of course, in the US, there will be certain sections of the prospectus which are drafted in a slightly different way, but this is not that different today from the prospectus regulation. Now, maybe a few challenges and solutions in the NLB transaction. Again, state-controlled company on day one. One of the issue was the pre-IPO dividend a few years ago, which in a way had an impact on the timetable. The dividend was paid to the government before the transaction happened. Similar to my experience in Hungary, the Slovenian parliament had to enact new legislation to deal with certain potential liabilities that the bank might have in Croatia, so we dealt with that. And I think the most complex point, which doesn't really come up often in Western countries, was how to make sure that the transaction settles in a timely manner and in a way that everyone is happy, including the investors. So these were the challenges on this transaction. Due diligence, very briefly, and this goes back to the point that I mentioned previously, that orange line that cut across the entire timetable. Due diligence is very important in capital markets transaction. Now, a capital markets transaction IPO is not an M&A transaction. What it means is that lawyers and advisors don't produce M&A type of due diligence reports. The prospectus is the end result of the due diligence process. The rules and regulations tell us that all material information has to be included in the prospectus. So there will be different elements in the overall due diligence process, but the ultimate objective and result is to make sure that the disclosure in the prospectus is correct. Now, many people think that due diligence is something for lawyers, that lawyers go into the data room and review the documents. No, that's just one of the elements of due diligence. There's also the business due diligence, and here the banks will be much more involved, looking at the business model, looking at the business plan, testing assumptions, and talking to the management. There's the financial due diligence, of course, similar to the business due diligence, but this may also involve auditors. The next point is the accounting due diligence. Why is this required? Of course, everyone on the transaction wants to be able to speak with the auditors and ask questions about their work with the company, how they audit, how they review the financial statements. Is there anything that they may be aware of in connection with the work? There's the legal and documentary due diligence, and of course, depending on the industry and depending on the business, there may be specialist due diligence. When does it come up? Mining companies is an example. Real estate companies is another example. Right? In those instances, you will look at additional disclosure in the prospectus, for example, valuation reports for the retail portfolio, and that's the specialist part of due diligence. If you structure, and here I'm going to use another term of art, if you structure transaction as a Rule 144A transaction, the private placement to US investors, we lawyers, US lawyers, will be asked to deliver what's called a 10b5 letter. Right? A 10b5 letter is sometimes referred to as a legal opinion. This is actually not a legal opinion, but this is a part of the comfort package that every investment bank will require on any 144A transaction. It effectively says, and I can cite this sentence off the top of my head, it effectively says that nothing has come to our attention, that anything in the prospectus is incorrect or contains material misstatements or omissions. Right? So this is, again, this is the end result of the due diligence process. We will be able to deliver our 10b5 letter once we complete the various different elements of due diligence. And I think the last point that I wanted to mention is the IPO research reports. Why is it important? I mentioned previously, very common in Europe, pretty much on every IPO, the pre-IPO type of research reports as a price discovery mechanism, not used in the United States, even though these days it is allowed in certain circumstances, but I don't think anyone uses pre-IPO research in the United States. The way how the process works, of course, to allow analysts to come up and to draft research, the company needs to produce what's called an analyst presentation. It's one of the longest presentation in the process. It's effectively the whole history, the description of the business KPIs, risks, financial information of the company. That pack is given to the analysts. The analysts are also able to ask follow-up questions, and on that basis, they produce research. Of course, a research report is an expression of independent judgment. It's how an analyst views that particular company, what it means in terms of process. Once the company gets to see a draft research report, of course, the company is not expected to influence the decision or the judgment of the analyst. And in practical terms, it means that the company, most of the times, will receive a redacted version of the research report without the valuation range, right? And the company will be able to look only and check the factual accuracy of the reports. And then when the time comes, the analysts issue the full report with the valuation range. Now the UK, and that's probably the last point that I will mention, the UK IPO model has changed. Now, over the past many years, as long as I practice law, the research reports were produced only by the research departments of the syndicate banks which were hired by the company for the particular transaction. Now, over time, the attitude, in particular in the UK, has changed, and the UK regulator came to the conclusion that in order to level the playing field in the market and allow access to unconnected analysts, meaning analysts which are not in the research departments of the investment banks hired for a transaction, they should also have access to the research reports and to the company and be able to produce research reports. The way how it is implemented in the UK differs now from how IPOs are completed and carried out in Europe. We now have the bifurcated disclosure structure. In other words, the company produces what's called the registration document. That's the base document containing pretty much all of the information about the company, the business, the financial section, the risk factors, the key strengths and strategy. This is published publicly, and after the publication of the registration document, unconnected analysts are invited to join calls, join meetings with the company in case they wish to produce research. Now the practice is still developing. Depending on who you ask, you will get different questions. How many unconnected analysts actually participate? In my experience, not so many, but this is the new set of rules, and everyone follows this now in the UK. The reason why I'm talking about this one goes to the point about dual listings. If you were to do, or if anyone from Latvia were to do a dual listing structure with an IPO in the UK, you would have to follow the UK model for the IPO. So you would need to produce the registration document first, followed by the prospectus, by the consolidated prospectus, which will contain the details about your particular tranche. Now, I'm running a little bit of time, but this is actually the last slide. So I hope it was interesting. I don't know if there are any questions. Please.
I do have a question. So would you see obtaining a credit rating for this company would go benefit as a part of formula?
This is a capital markets transaction, but this is an equity capital markets transaction, right? We don't necessarily focus on credit ratings, right? We don't issue bonds. I think credit rating will be much more relevant, if not critical, in the context of a bond offering. In the context of an IPO, yes, people will pay attention, but is that the key driver of the transaction? I don't think so.
Okay, thank you.
Thank you.
Thank you, Pavel, for a very insightful presentation. I'm excited to present next speaker. Our next speaker will be CEO of Port of Tallinn, Valdo Kalm. And let me just mention two things. Port of Tallinn was the first SOE in 20 years who joined stock market. And one more thing, which says that it was long-awaited event. 1% of Estonian population subscribed to the offering and became shareholders in Port of Tallinn. So Valdo, please tell your story.
Thank you, ladies and gentlemen, to inviting me. And I would like to use the momentum also to introduce the company before I go to the IPO process, because it's all about the sales of stocks. Maybe there are some people in the audience to buy our stocks. Therefore, I would like to start with some slides and then to the process. Yeah, we listed last year in June, and free float is nowadays 33%. Estonian state stayed as a main owner with 67%, and we are landlord port. That's very important. That's part of our story also, that we own the land in all our harbors. We have 5 harbors, and that means that we're offering infrastructure services to the customers, and then our customers, operators, building the superstructure on that. But we own the land. Then we are not very typical port, and there is really difficult to benchmark that we also acting as a ship owner. That means that we own the ships and we're operating domestically between our mainland and islands. And therefore we own 5 ferries and also 1 offshore icebreaker. Then we have some land in our industrial parks and for the real estate development. Already before the IPO, we defined our business areas, and we're running 4 business areas. Passenger business is the biggest in volumes, also in revenues, in EBITDA. And last year result was almost 11 million passengers. With that, we are 4th port in Europe, and cruising part is also is there with 650,000 passengers. Last year was quite successful. On a cruising business, we had 15% growth. It's globally booming. It's very global business. And we have been very attractive port with our old city and port service. Therefore, it's a growth area. Also, total passenger volumes showing tiny growth. And also on cargo, we had last year 7% growth. We have very different cargo. That means our two cargo ports are very multifunctional. And then to the shipping business, we actually serve 2 million passengers, 1 million vehicles. Yearly basis, that means it's quite a heavy operation. And then, yeah, this Botnica, what is icebreaker, and it works for wintertime, works for Estonia, and then we got very excellent contract in Canada. We're serving one private company in the very north of Canada. This year, happening the same. And then we have industrial parks and also some free available development area around the old city. And we would like to open the tenders there for developers. We are not going to be the developer because we are port. We're focusing on port business. But just to utilize that momentum, we are ready to sign very long-term concession agreements up to 99 years. That's what we do actually with our operators in a port. Our results from last 3 years, what we presented also in roadshow, we have had revenue growth and EBITDA growth. The analytics nowadays follow more, especially this EBITDA and EBITDA margin. Net profit was last year lower because we paid very high dividends to the government, and then we paid the taxes from the dividends. Therefore, the net profit is lower. Just show that very important. I will come back in a process to describe why is the story behind the company is very important, and not only the equity story, but the story, what kind of businesses. And part of our story was that we have very good differentiated revenue, diversity of revenue. That means the risks are splitted. And here you see that on passenger side, we have the biggest part of the revenue and EBITDA, and very good customers, honestly, very good customers. On regular lines, Tallink, Eckerö Line, Viking Line. And then on cruising business, we basically have all the biggest cruise companies in the world, as a Carnival and Royal Caribbean. They all enter into our port. On cargo side also, last year was very important that HHLA, it's the biggest container terminal in Europe, bought our container terminal in Muuga port. And there are some other players, and also for us it's very important that there are regular shipping lines entering to our ports. And then under the other, it's our offshore business. And on ferries, state of Estonia buys the service from us. Very briefly, what kind of growth opportunities we have. We position us as a dividend company, but always you have to find the growth. And we have possibilities on all 4 areas. On passenger side, we still see the growth in line business and cruising business. Nowadays, line business is supported very many of Asian travelers. They fly with Finnair to Helsinki, and then they visiting Tallinn. And then we started to renovate our passenger terminal. We are going to build this year a cruise terminal. And just recently we implemented a smart port application. That's such a digital solution to manage all the trucks and vehicles in the old city area, because it's in a very middle of the city, and the number of trucks is increasing. Therefore, it's number recognition, Schlagbaum up, and you can drive to the right line and right ship immediately. On cargo side, definitely we have been historically such a transit harbor or port for Russian cargo. We serve a lot of west-east corridor. That's still important corridor, but we're developing north-south very heavily. And I guess we all supporting Rail Baltica, and the starting station for Rail Baltica will be in Muuga. And therefore we see us as a hub for the Scandinavian, Finnish and Swedish cargo, and we have regular lines to Finland and to Sweden. Still Chinese possibilities, LNG, that's the new market, and definitely digitalization of the whole value chain is a key. Then we have growth possibilities in our shipping business, the traffic of people, and thanks to Latvian also visiting Saaremaa and Hiiumaa, the growth is there, and government ordered some extra service last summer, same for this year. And then I mentioned this Botnica, who got a good contract in Canada. Real estate is on the master plan level. We signed the MO with the city government, and now step by step we enter into this business, but that's really future revenues, not the nowadays issue. But then to the IPO. That's, I guess, most important slide, because before the IPO, we really sit down with the politicians, with the government, and with two ministers, economy and transportation and finance, and we set the objectives and even the indicators. We really had such an open discussion, and we had very open communication. These are objectives. That's the privatization. That's really the step forward after 20 years, after the Eesti Telekom was listed. And then the first main objective was to really have a new such investment opportunity for Estonian people and pension funds. That was extra focus. Then secondly, to boost local capital market, definitely the stock market, Nasdaq Tallinn. Third, very important, really invite international investors. And that's valid not for us, not for Estonia. We are in a very same boat with you, I mean Latvia and Lithuania, because small economies, and we see the view from outside in, from outside, that they see the whole region. I was previously the CEO of Eesti Telekom, and when I met investors already at that time, Eesti Telekom delisted 2010. Already then they saw us as a one region. And when we now had the roadshow, then they really said that where you are so interesting economies, all of you are growing very rapidly, but where are the companies? We just know Tallink. That's it. Yes, we a little bit remember Hansapank, Estonian Telecom, that's it. You are not on a map. Therefore, I guess for such a small economy, for such a small nation, to attract internal investors and investment, that's very, very critical. Therefore, we put it to the target, and via this roadshow, we really played such a, how to say, ambassador role of Estonia also, because there was a lot of questions about Estonian economy, about regional economy, and that's, from my point of view, absolutely crucial and important. And then, of course, efficiency and business focus and transparency of the management of the company, and of course, value of the company. But these four objectives were set, and they really, contribute the value not only for the capital market, but for the growth of whole economy as such. Then we sit down and we also set the targets, concrete indicators. We really, together with government people, would like to see some pension funds, then at least 6,000 Estonian retail investors, and then some turnover and value targets on Nasdaq Tallinn. Very briefly about the process, as our previous speaker described the process very well, then maybe I'm not focusing on process, but maybe how we systemized this process and what are the most important steps. Definitely, you have to understand the position of the company on a stock market. Is it dividend or growth story? In our case, we said very honestly that we are a dividend company, very stable infrastructure company, of course, with some growth possibilities. And that's not the only equity story, it's a story about the company. And you have to structure your business very well and really understand the profitability of each business area. And we presented also that during the roadshow. Because, as I already showed you, the passenger business is extremely profitable in margins, but definitely not the local ferry business. And there are a huge difference. Then timing, of course, and in our case it took a year, even a little bit more. Then definitely choosing the advisors and partners. I will come back to that. Then legal framework, very important, and the model as such. Segments and segments in terms of segments of different investors, but then the markets, also very important to define. Then, of course, cost for that, and team. It's all about people. It's really all about people. That was a tough process, and thanks to our colleagues, we made it happen. But then our position, historically, as a Port of Tallinn, historically has been as a business entity already many years, and we paid out last 10 years average 30 million euros dividends. Therefore, we have had very nice track behind that. It was a little bit easier to explain that's in our DNA already. We are acting as a business entity. There are no any hidden agendas. We're not paying nothing to the local municipalities or to state. It's pure dividend. We own the land. We have all the licenses what is needed for the agreements. Therefore, we fixed already before the roadshow dividend policy, pay out at least 30 million in coming 2 years, and then at least 70% from net profit. And our proposal for this year's AGM is 35, because we had very good result last year, and therefore we're a little bit overpaying, or we have the proposal for the AGM. Then you see we had one extra dividend from last year, pre-IPO dividend for the government. But that was described, and investors took it very normally, no problem. It was quite obvious. Yes, that's the very busy slide, and you are asking where is the bar. I'm not going to explain it, but as previous speaker said, very important is due diligence, and very important is this prospectus. And in our case, the prospectus was 340 pages. That's tough. And honestly, they're full of different legal regulations, and Jesus Christ. But we even did that. And we had it, and as we also introduced us in United States, in US, therefore there are additional regulations, but at least 1 year to prepare the company, plus prepare all the IPO necessary steps. Advisors. In our case, the syndicate was quite big. First of all, we wanted to cover all the markets. And we had a tender, and we selected city for UK and US, and they did good job. They did good job. Then Carnegie for Scandinavia, of course, Estonia and then shipment and ports, they are very well known, but still, I guess also Carnegie did very good job. Erste in Central Europe, also very well, and then Swedbank and LHV for retail Estonia, mainly. A little bit LHV for Baltics also, but mainly they did retail part in Estonia. Then legal advisors, financial advisors, auditor was our auditor, industrial research, that was tiny job, not so big, PR advisor, and as retail was very important, then retail marketing advisor. Legal framework. I am not the lawyer, I am the engineer, and therefore I am not stopping there so much. That was also tough, but there was need to change State Asset Act. Then we changed the articles of association of the company. There was some restriction of information sharing, definitely. Security Market Act locally, and insider list. That's also important to remember. And here you see our shares before the IPO and after. Very important, defined the segments. And as we wanted to cover quite broadly the segments and markets, then we're living in a marketing area. You have to understand the messages for the different segments. Therefore, one part was institutional part, local and international, and then retail. And definitely the retail part and mainly local was very different from that. And of course, different activities followed. We, during the roadshow and pre-meetings, we introduced Estonian economy and even the region. We promoted then our business drivers, growth opportunities, very clear message on dividend policy. Also very important was, and there was a lot of questions about the board, how independent is the board, supervisory board and management board. And then that was very nice from our side to introduce that even before the IPO, our supervisory board was independent, no politicians, mainly business people, and two of these, and chairman of the supervisory board with experience from listed company. That was, I guess, very good sign. And on management board, we are three of us, and I'm also with experience from Estonian Telecom. Then we had 110 meetings in 11 cities, and that was organized quite well by the banks, I would say. All the meetings were there, and we didn't miss any meetings. We had problem with small delay, 7 minutes in London, but that's it. And huge interest, honestly. Maybe it's more, in this period we are a little bit more stable infrastructure company, but still I would say that was a huge interest to whole region. Therefore, I felt such a very good atmosphere everywhere. Even in New York, we had one day in New York what was very successful, and that worked especially for the aftermarket. And then we had such an open days in a port. We invited future private investors to the port area to show our operations, and yeah, we had very open communication. And then we had retail offer activities. We made a working group and such a proactive communication with different channels. And we have a massive campaign also, because we had quite a tough task to have retailers. That was actually the wish and target from government side. Yeah, some such slides that it's my port, my ships, and to a little bit be closer to the older ladies and younger guys, and yeah, that's my ship, I'm driving with my ship, and yeah, you know. Then outcome. Here you see the IPO value or revenue, and what is very important, we got 14,000 investors, yeah, almost 1% of Estonians subscribed, and it subscribed almost 4 times. That was also, demand was very high for institutional investors and from the individuals. Then also good news is there is more than 5,000 new security accounts opened during the process. And of course we had a budget for the IPO. That's a sensitive issue. We definitely followed cost and reported to the owner, to the government, and that was some 6.5% from IPO revenue. What was a little bit under the average international practice. And for us, very important as a global business, as an international business, was this positive media coverage, not only locally but globally. And then we got some rewards also. If we measure our target-based indicators, then the result was really good. There was 3 Estonian pension funds plus 4 Estonian funds. Then, as I mentioned, 14,000 retail owners, and then we achieved also good turnover in Tallinn and also in Baltic in this period. The shareholder structure, that's by the end of the March. The second biggest came JP Morgan from America. EBRD was second. You have to a little bit rethink that. You're welcome to compete with JP Morgan. But then SEB different funds, we don't know exactly what are behind that. But then LAGV pension funds and the LGV customers. And if you take the split between the different institutions and retail, then it was quite precisely what we promised to the government and what we really achieved. It was 20% from IPO volume retail part, and totally now stays on 7%. That's almost what we expected. Therefore, we covered international funds, Estonian retail, and pension funds. That was such a target. And yeah, we landed quite well. We are happy with that. And we increased our market capitalization or value, because the share price is up almost 30% from the IPO price. And of course, the first month was very active. Now it's a bit calming down, but still quite active. And here we are. Thank you for attention.
Thank you, Valdo. If there are any questions right away, or if not, there will be other opportunities, as we will go with panel discussion. So thank you, Valdo. Please take a seat at the table. So now I give floor to Kārlis, who will ask all the panel participants and will lead the discussion.
Yeah, thank you. Thank you, Daiga. Thank you, Valdo, for this very interesting presentation. And I just would like to invite other participants. I see in the room our Hope, our good minister, Minister of Transport, who is very supportive for this topic, who immediately, thank you, Minister, joined to this idea to participate here. Actually, Minister of Transport is actually one of the biggest holders of state-owned companies, because in Latvia, if you don't know, still the state-owned enterprises are splitted. Yeah, as a minister, so the ministries are managing state companies. Yeah, we have not centralized. I hope we will do it in the future, but till now it's under ministries. So the Ministry of Transport manages important companies. So, and I would like to invite Pēteris Stepiņš from Swedbank. Swedbank is a large bank here in the Baltics and actually largest manager of pension money. 1.7 billion euros in Latvia are managed of so-called second and third pillar of pension money. So the rich guy managing billions. So I would like to invite our boss here. This is here hall, here house, Reinis Bērziņš from Altum. Altum is a state-owned development bank, actually, which supports a lot of different initiatives. And actually, Reinis is a manager who managed to issue bonds, 30 million bonds. So can share this view, and is a good example of Latvian state-owned institutions or companies which are doing actually good things in capital markets. I would like to invite Rafael Šepaņak from Global UBS Bank, Investment Bank, who is the head of emerging and European markets here. A lot of experience he has seen in a region. I hope he will tell you and me his things about, let's say, where we as the Baltics are seen from the global perspective and what we can do better. And who else? Yeah, please. Biggest investor, as we have heard, IBRD, Mr. Takacs, so who already explained a lot of experience in this more than 25 years here in the region of European bank here. And as the minister joined to this event a little bit later, I will just give, of course, first opportunity to talk to the minister. So thank you, Minister, again, that you are brave enough, that you are here, that you are supporting this idea of listing and this. Then please, floor is yours.
Yes, hello everyone. I am very glad to be here today and feel like among friends because for quite many years I've been involved in the privatization of state-owned companies and later in the management positions, and also myself owning a few shares in some listed companies. I understand also the position of minority shareholders, and now 3 months already in the position of the Minister of Transport, I'm trying to grasp how to manage all these large state-owned entities. And certainly there are many issues related to the ownership and to the performance of the companies. First of all, it's a governance, good governance, what we have to ensure in state-owned companies, first of all, even before we start thinking about going private. Then it's the issue of the where do we place ownership in the whole structure of the government. Who are the real owners, who are the state agents responsible for governing these state-owned companies? And honestly, during these 3 months in office, for many times I have felt conflict of interest when on the one side I had to speak about liberalization of the market in railway sector, in road maintenance sector, in other cases, and still we have state-owned companies there, and then being asked about the profit and the dividend policy and so on, how this liberalization would impact the performance of state-owned companies. So therefore, not only my preference, but also what we have been discussed among the government members, the preference is to have a centralized owner of state-owned companies as soon as possible, established and well performing. I would with pleasure any next day give away Latvian Railways to such centralized owner in order to make sure that the sector as such and the quality of performance of different actors in the sector is up to the standards. Also, we have to speak about the liberalization of several sectors. In the transport field, as I mentioned, we already have quite open railway sector where different operators, cargo operators are in place, but also in the passenger carriage. Theoretically, from the 1st of January, there is opportunity for everyone to step in and compete with our local state-owned passenger company. We are also pledged in the government declaration that we will open up road maintenance sector. We will change the principles of the public transportation sector in few years. So all these activities will have consequences on the state-owned companies in operating in these fields, and possibility to look at the ownership change. And then what is left is preparation for private ownership. And here we should start from the governance side, from the very clear strategy of the company. Where do we want to be in 5, 10, even 20 years? What investments are needed? What other regulatory laws are needed in order to ensure that when the company is private, we ensure fair competition and we do not create monopolies, private monopoly in one or another sector. And at the end, in order to sell the shares of the company successfully, we need success story. This is what I envy, Port of Tallinn. There is this success story, which is actually supported by so many travelers. The number of passengers, and I believe every Estonian has tried the Port of Tallinn and at least quite large part of Latvians as well. So they have tested this company, the performance of company, and they believe in success of this story, not only in the past but also in the future. And from that perspective, I think when I look at the portfolio of companies under the Ministry of Transport, then probably Air Baltic would be one such example, which we are prepared to offer to other investors. We are interested in attracting not only strategic investors, but also through IPO process, additional funding. I think this is the case where the company is well known not only in Latvia or in the Baltics, but because of their performance, because of acquiring new aircraft, they are quite visible also in the international aviation market all around the world. So this is one very quick example when we are talking about attracting private investors. Others, I think, still have some time for the preparation, for opening up the sector, for management, for the governance, and these issues what I mentioned.
Yeah, thank you, Minister. Yeah, so that's, I think, really good that Minister is supporting this this idea, and really Air Baltic is, I know it quite well. So as a company, so ready for that. The question is more about markets, business development, and so on. So practical things. So the company is acting as private company for a very long time already. But let me maybe ask you this question, I think, which I believe is important: strategic and public. I think somehow Latvia have that those things are not somehow living together. If the asset somehow is strategic, then hands off. This is something, I don't know, very, 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 very important. Nobody really explains why and what it does mean. And actually, how you see a company might be strategic and listed at the same time? What do you think?
My personal opinion, there are no secret cows specifically devoted for keeping them for 100% state ownership if there is the reason behind going public. I think that what we have to avoid is creating private monopolies, and first we have to look at particular sectors where these companies are operating. If this is something where there is already competition, or we are opening up the sectors, then it's more acceptable also to general public. I think some 10 years ago it would be unbelievable to think of, for example, Latvenergo being listed somewhere. I remember the fights in the parliament a long time ago about secret river Daugava and how we can sell our mother river and all these stories. Yeah, there was the intention to organize a referendum on the issue, and now when I think every user or receiver of electricity understand that there is a competition among suppliers, and this sector is really competitive with several large players. I think in this perspective now there is a more chance to persuade general public. Yeah, this is only one of few companies, and why not be listed? Yeah.
Good point. I share fully with Minister. This really Latvenergo is already partially listed with the bonds, so the company is actually one of the most valuable companies in Latvia for a long time, and why not? So that's very logical.
May I add? Yes. In our case, in Port of Tallinn, I guess that's very important for the government defined what mean this strategic asset. And with Port of Tallinn, they defined that they never sell more than 39%. first stage. Now, maybe that's not the issue to sell just now more, but never they go below 51 to keep just control because of strategical infrastructure. We serve NATO ships and these kind of things, you understand. And with other companies, I guess it's basically doable with all the state-owned companies. Therefore, there is another list now 4 or 5 companies that are on a list, and it's, how to say, doable to define this strategic interest.
Valdo, do you feel right now less strategic being on the stock exchange?
No.
I mean, not you, but your company.
No difference.
Of course, that was a little provocative question, so thank you for that. But I think that's a good point, that somehow this strategic importance is just to use to do nothing. Yeah? So from some of politicians, and unfortunately, that was in the history. I hope that will change, and as a minister right now is here, that is one of the examples that things are changing. Let's maybe then jump to let's say good example to Reinis, yeah, who is like this good example with Altum being on stock exchange, doing things differently maybe from other state-owned enterprises. Reinis, what was the main challenge for you to talk with your actually 3 shareholders, 3 ministers, or prepare your company, or to talk to investors? What was the main challenges in this process?
Yeah, so if you would consider was it easy or not, I would like to say that perhaps both yes and no. At the very beginning, you also mentioned the conversations about with the shareholders. Those were quite easy conversations, because when the Altum was founded back 4 years ago, there was also content for this management board, and I went there and through this competition, and also said that if I will go to the Altum and if I will be CEO, this will be one of my main proposals, just to actually to get issuing the bonds to be more independent from the EU funds, from the state treasury, similar like also other very good institutions in Eastern Europe, for example, also Finvera, which is a similar organization up here in Finland. So actually we had that support from shareholders, from supervisory council from the very beginning, also from my colleagues from the management board. They are also present here, and I guess we created a team. So that was the easiest part. The hardest part was actually also that we did some hard exercise. We considered that it will be totally new program, so there will be not a single euro attracted from different sources, just from this bond issuing, so it was quite a challenge. We also designed that. We said that those will be green bonds, because the program was connected with the green ideas, green support for companies. So a lot of challenges. We said that we will go through the rating system. We got the Moody's rating. And actually now I can just name those things in a couple of minutes, but when you go through, I remember 2017, that was quite a year, and that was actually the project #1. So big team there, and for me, myself, it was like, I don't know, some 30, 35 meetings just for this issue during the year, right? So I had a great team, as I said, from the management board, and also Elin, who is present here, she was also like managing this process in excellent way. So it went easier when we got this first bond issue, because it was success story. We got a great coupon, 1.3. We had, there was an 7 times bigger interest than we actually wanted. We said that it's enough with 20 million euros. Demand was around 135 million euros. So when we went through this procedure, then the second already, it was quite easy. Although it happened actually last year in the March, you remember what happened in February last year, right? In financial sector, there were several things which happened, and we just thought, okay, what we will do with our issuing of bond, which was planned back in March 2018, but nothing happened. You know, the famous sentence, but really nothing happened. Because it was a great coupon again, the same 1.3, great interest again, 6 times more. So Moody's stayed with the same rating, so it was a success story, and we are now looking forward for upcoming years to issue again bonds for several times more for upcoming 3 years in amount of 70 million euros. So totally it will be 100 million euros. So we feel free with that.
Yeah, see, Reinis is very active in issuing bonds and continuing to do that. So that's really great to hear. So, because yeah, so in terms of management, you mentioned your team and team is present here. What maybe is the changes in the management mindset before you actually went to the public market and after that? Do you feel some, or do you tell some differences are there or not?
Of course, honestly speaking, of course, everyone understands those great words, corporate governance, being transparent, open up and so on. But when it really happens, then also in our office, there were some ideas why we should do that. We have like, I don't know, quarterly reports to our supervisory council, why we should do more, why we have to, you know, just being so open, right? But it helped also when the Moody's came here. And when the Moody's asked the questions, you really understand that you have to open everything, literally everything. You have to be transparent as it possible. So it actually, when we got this Moody's experience, then it was also any experience afterwards with the stock exchange, it was already quite good.
So your life is, let's say, not so easy, but more interesting as a CEO of listed entity after that, yeah?
It was like interesting, and now it's again only good thing because as we say, the second time it was really very easy when you do the first thing, and I also understand, I don't know how many pages we have, definitely like not 300, but a lot of them, right? When we did the first exercise, it was really a lot of the paperwork, but afterwards when you have everything that it was, you cannot compare the first and any other time.
Yeah, Valdo, maybe I will ask you as well. In terms of management motivation, as I understand from you, before the listing, anyway, the company was acting as private, being 100% owned, but anyway, as private business. But anyway, do you have introduced them stock options or other, let's say, motivation bonuses, or in terms of management compensation, there were no significant changes after IPO?
Yeah, we decided together with the main owner or with our ministry that we are not going to introduce stock options in the first stage. And now we open this negotiation again. We just decided not to do it at the IPO, during the IPO. And we have such a common incentive plan, what is typical balanced scorecard, but it's quite precise. There are main targets and then sub-targets, and that's applied for 120 key persons. And they getting then 3-4 months salary additionally if it's executed. But it's very precise, a classical balanced scorecard. But yeah, we think about the stock options because of very difficult situation on a labor market. And I guess same here. You have to keep your specialists. That's not only the management board, but all the key persons.
Because at least in Latvia, there is many reports, analysis done by Fontes, for example, and other HR companies, that there is a huge difference between state-owned like enterprises and salary level and private companies, at least in Latvia. And of course, this is a big problem because on one hand, of course, there should be special rules for state-owned companies and so on, but there are some, in my opinion, some social style limits which purely limits, let's say, some standard motivation system to be in the place in companies which are actually competing with private companies. And this is like some Soviet heritage that still we have, and I hope is this listing, for example, this is one way how to solve it.
You're right, we have the same problem. There is a difference between private and state-owned companies, but the difference is nowadays a little bit smaller already, yeah, but still it is. But we're saying in a company that money is not most important thing in a life.
And that is...
there are other motivations.
Yeah, and that's, you should love your work, I think you should be happy with that, and so that's, of course, is more broader thema, but not maybe today, but sure. Then I will ask to join to our discussion Leary Global View and Player, Rafael. You know a lot, you have seen a lot, you are traveling a lot. You have seen and have discussed, I think, this kind of discussions a lot and a lot. What are your, let's say, main words, what you can say here to people about Baltic markets and those issues and potential that we are discussing here? What as a outsider but insider at the same time, what you can say?
Maybe just 2 words about myself, because you may be wondering what this banker is doing here. I am Polish, so I'm almost a neighbor. I grew up in China, I went to schools in America, and I've been working for the past, I think, 18 years or 19 years, mostly initially for 10 years at Goldman, and then for 5 years at BAMO, at Merrill Lynch, which in the meantime became Bank of America Merrill Lynch, and then in the last 2 years at UBS. I did have a stint at EBRD, and I think that lasted 9 months or so, and this is one of the most enriching and eye-opening experiences ever for a young, aspiring banker, and these relationships are being continued now in my current experience, because I cannot imagine in the last 15 years or so any single transaction, situation, project in Central Eastern Europe without some kind of participation of EBRD in some kind of form or shape. EBRD, after all, is the largest lender to the real economy in this region. It is the largest LP, limited partner. It is a large fund of funds, invested, I think, currently in more than 200 different private equity funds. It is also the largest foreign direct investor in a lot of these economies. So when we come to a situation, EBRD is already there as a lender and in some situation as an existing shareholder. I started being a completely unaware little kid sitting in my cubicle in New York when we got a call that Goldman won privatization mandate to sell Czech Republic's second largest bank, Komerční banka. That was way back in the year 2000, before the internet bubble bursted and before September 11. So I was shipped to Praha, being a financial institution banker. We call it FIG in our jargon, and I used to be this introvert geek sitting in a cubicle and cracking financial model, because that's what I was trained to do. And I had to interact with the Czech government at that point. They didn't have a centralized agency. This is something that the theme which came up today, and I think that this is a very kind of valid point which we can evaluate later. But state stakes used to be held in different agencies, not just different ministries, but in the case of, for instance, banks, it was held under the national bank, so basically the central bank of the Czech Republic. And I remember that this was a very kind of convoluted story, because there was a lot of contingent liabilities about preparing state-owned enterprises for privatization, where we were debating whether to spin off the bad bank or sell one big Komerční banka with the bad bank sitting inside, but with the government pledging that, you know, they will take care and they will issue some guarantees for the liabilities, so that you sell the bank intact, but the incoming foreign investors doesn't have to worry about the consequences of those liabilities. They did not at that point want to follow the Polish model of pushing as many stocks into the Warsaw Stock Exchange as possible, because the bank was so mismanaged. They needed know-how and they needed capital now. So we were involved for months before the actual tender was announced that, hey, come over here to the Czech Republic and submit your non-binding bids, because we needed to find the management. We needed to find English-speaking Czechs. So we brought one from Austria, we brought another one from California. That's another digression, very interesting feature. You guys from the Baltics and Poles somehow ended up in cold Chicago, where the Czechs, a landlocked country, they congregate outside of San Francisco. It was a phenomenon for me, going for the better climate and the sea access. the guy who was brought became the CFO, the guy from Austria became the CEO, because we needed to have people with experience, but also who could communicate with those investors. So maybe that's one of the reasons why I ended up at this table, because early on I had experience. I think that 50% of my work was basically done throughout my career with state-owned enterprises. Then privatizations and the sales of Ukrainian banks, all the major all the major flotations listings of the Polish company, whether it's PZU or the Central Eastern Europe largest bank PKO, or the Warsaw Stock Exchange to be listed on its own platform, or Tauron, the energy company. I've participated in all of them in different roles, at Goldman and at Merrill, and then most recently when Romania opened up, it did open up because it had to, because the IMF struck a deal back in 2009 that we were going to lend you money in 2009, but there are certain preconditions, and one of them is that you need to privatize your energy sector. Otherwise, probably you would not be seeing all these companies like Romgaz, Electrica, Transgas, Transelectrica coming to the stock exchange. NLB is a good example used by Pavel just a moment ago, and the case study, but please do not forget that the bank was capitalized in the midst of the crisis, and there was an agreement with the European Commission that by the end of this year, 75% plus one share needs to end up on the stock exchange. Otherwise, I don't know whether there would be a willingness of that allegedly very open-minded small economy called Slovenia to privatize the largest financial institution in Southern Eastern Europe, which is present, I think, in 6 or 7 other countries. So there are different motivations. There was a question earlier, strategic and non-strategic. I think we need to be very careful, and I'm representing kind of advisory investment banking community here, but I'm also very aware of the years which I spent in China, that there are certain companies, and look at water utility companies, whether it's Vietnam, Cambodia, Indonesia, which keep connecting thousands and thousands of people, citizens, for free. No other company would even consider that, right, in Western Europe, in Western world, because we don't even think about it. So I understand that...
sorry, in Riga, one traffic company here in Riga that is operating in this style, yeah.
Swiftly moving on, I think that the government officials need to think very carefully whether these are some geopolitical motivations, whether some social motivations, whether, you know, I think that it's very challenging these days to be a state-owned enterprise in the European Union. There is so much scrutiny, not just by the investor community and by media, including social media. I think that everybody believes that the state-owned companies in those countries need to be some kind of role models in terms of gender equality and a lot of other things, right? They need to be very careful how they deal with the environmental issue and things like that, because otherwise everything is out in the open and everybody is, has an opinion, right, about state-owned enterprises. I think that one of the key takeaways, because it came up in a number of presentations, but also in this forum here in our panel. Just like the B word is a taboo word when we talk about the UK, when I go and see clients,
you mean Brexit,
and nobody wants to mention this word, just the P word for privatization is some kind of weird, I think that we all have bad connotations with this word, except maybe to a certain extent Poland. And I'm not saying this because I'm coming from Poland, but I think that we are all kind of damaged. And I can say that because I'm one of you, I'm from the region as well. I think that what we saw, not all of you may remember these things, but I think privatization, which happened in a very kind of haphazard way 2 decades ago, in different forms in our countries, whether that was a voucher privatization, where, with all due respect to babushkas, but when they received those certificates and they didn't know what to do with them, but somebody else who was a little bit smarter offered them some cash for that certificate here and today, for which that babushka, the proverbial regular citizen could buy bread and butter and milk, that was more valuable than some certificate, and certain individuals accumulated a lot of those certificates, and then after some time they turned out to be, majority controlling shareholders of major blue chip companies in the country. And we've seen it everywhere, right? Not just in Czechoslovakia at that time, also in Ukraine, also in the Soviet Union, also in Russia, also in the number of countries in Southern Eastern Europe. That's why a lot of people think that, oh, maybe management buyout was better. Yes, we also have examples of CEOs who reached out to their friendly loan officers from friendly financial institutions, give me a loan so that I can buy the ownership. But by doing so, it was a quasi-privatization because nothing really happened. There was no new fresh capital. There was no new know-how. Nothing changed on the supervisory board of those institutions. So by taking all this into account, when I'm coming into the situation, and the most recent one being that Romgaz, which really put Romania on the radar screen of a lot of investors when we went through hardships because we needed to translate into the local capital markets agency and then to the parliament what a GDR means, because if you want to float a company and if you want to offer $500 million, it's just the local exchange, with all due respect, is not able to absorb all this, your retail and your institutional investors. Then we need to do a dual listing. We need to create a momentum for the pricing, and that pricing will be driven not by the local market, but by foreign investors. Foreign investors are not going to spend 6 months to establish an account on the Bucharest Stock Exchange. So you need to go. And I don't care whether at this point this is a dual listing in Frankfurt or Vienna or London, but the investors are not sitting in our region because only a few of them are in Warsaw, because most of the privatizations happen there, and then they realize that maybe it makes sense to actually have a direct access to the local stock exchange, because there is a sustainable flow of new companies coming in. I think that one of you also mentioned that what next, right? After the Port of Tallinn, and investors in the US asking, okay, so we're ready for the next opportunity. So we went through hardships, but the government very skillfully, and we borrowed the lessons of the Polish government, said that we are not selling, what's the term, national silver to foreigners. We are empowering you, the electorate, for God's sake, the citizens of this country, to be the co-owners of your blue chip companies, of the household names in this country. And we did the way, I think that, Hannes, you put a slide with the PKO BP, the transaction on which I was one of the lead managers at that point. We even utilized the post offices and the metro stations, right, in Warsaw to actually distribute the certificates. So there was a very kind of carefully planned campaign to the citizens with commercials right before and right after the evening news that we want to make you, Poles, the co-owners of your largest financial institution. And I think that was very telling, and I think that it was not a gimmick. That was virtually what was happening. And also, I remember when the US investors were telling us that bring more, don't be selfish, don't be afraid, allow for more companies to go to the stock exchange because you're fully in control of the process, right? You will still end up controlling those companies. Just offer initial 7, 12, 17, 20%, right? What we see right now when you look at the largest blue chip companies from Eastern Europe, whether it's the Polish energy or banks, whether you look at MOL, energy company from Hungary, or ČEZ, energy company from the Czech Republic. In most of these cases, the government either still controls them and has the proverbial, 50% plus one share, but in some extent, in certain cases, just a blocky minority stake of 25 plus 1 is sufficient. So different motivations, but what I'm trying to say here, because you asked me the original question, and sorry for taking so much time, I think that key takeaway would be that, call it privatization or invent a different word, this is allowing you to participate, to become an owner of some of the blue chip companies in your own country, and then following the language from EBRD, which I like, create the equity culture in the country. We are not earning anything these days by putting money into savings account in our banks. Doesn't matter, these banks are here in London or in Asia, which means that we also encourage citizens to think about some other ways of saving for future, right? And that could be investing in equities of their own companies that they know very well. And I think that goes without saying that we also allow for local pension funds. I don't even know in the small countries like Latvia, Lithuania, the Baltics, but also Czech Republic and Hungary, there is not much choice in what these pension funds can invest. They're probably overly invested in government bonds or some other OECD fixed income instruments.
This guy knows very well.
And he knows very well, because there is just not much liquidity on the local stock exchange, right? So we also help our own pension funds, so it works for us, for our future retirement payments. I stop here because I can go.
That was good and a lot, yeah. Rafael, thank you for that, as you have this very, very bright and very long knowledge and history and experience. So that's really, and I guess that's you gave to the minister and other politicians hope. I hope here in Latvia those selling points, yeah, that let's say take care about your pension yourself, support your national champions, national companies, yeah. So government anyway will control like 51 or more. Even with 25+1 share, you can do a lot. And actually, I've asked Waldo, this 67 that was planned, or that was like by demand, supply, like analysis result? You like that was a goal to sell 30
exactly
3%. Yeah.
That was planned, but at the same time they said that maybe in coming future they will sell more, but not. They go below 51. That's what they stated. Mm-hmm.
Yeah, and still be strategic asset, and government controls all most important decisions. Yeah. So Petris, then to you. As I said, you are the biggest actually money manager here in Latvia and probably in the Baltics. What to do if there is no companies to invest? What is, let's say some rational proportion? Let's imagine that there are like 10 new IPOs in Latvia. It's wise to invest very big money proportionally from your portfolios in one country. What are those risks and allocations and so on? What are? Because finally we see that in last years altogether investments in Latvian economy of Latvian pension managers has decreased significantly, 6 times, from some 60% to some 10% today. Yeah. So. No instruments, yeah.
I guess you already answered the worry that Rafael raised, that well, we are over-invested in local bonds, etc. That's not true. We were invested like 5 years ago. Now I guess Latvians have become more like Estonians, in the sense that in Estonia there has never really been a government bond market, because well, government has no debt. In here, well, partially thanks to central banks who are buying up everything, well, we're investing in different vehicles. And what to do when there's no local investment market? Well, in our case, in Swedbank's case, we've gone the alternative route, meaning we're investing a lot of money into alternative investment funds, which is Baltic real estate, Baltic private equity. And if we compare amount that we've invested in Baltic stocks, then across second and third pillar in Latvia, those are 18, 19 million euros, 18, 19. But if we look at alternatives, then in alternative investment funds, it's over 100 million euros. So, and we've been working very, very carefully on selecting the alternative managers, and with our program that's been running for 5 years, well, we managed to build up a very good investment portfolio, and still we're a believer in that asset class. So why is it so? Well, because, as everybody most likely knows, there's no really an equity market in Latvia, and also for us, the Baltic equity market is pretty small. I guess I could add that spoon of sugar in this water glass, and it's gonna be okay. But if I don't have a spoon, if I have a bag of sugar and not the usual 1 kilo bag, but the big 50 kilo bag, and I'm gonna pour it in, nothing good is gonna happen. The same is like with local stocks. So when there are new local issuers coming onto the market, we're looking at them, and basically, if there's gonna be a supply, and if the price is gonna be good, because, for instance, we also looked at Citadel's IPO case, and well, we were willing to invest, but not at that price, at lower price. So, if the company has good pricing, if it has good corporate governance profile, and if it has a good sustainability environmental program, then yes, we're gonna invest. And I'm a believer in investing in local economy because, well, it then comes back through other channels to our pension savers, not only through the returns that these local investments generate, because they are illiquid, and usually in financial markets, if something is illiquid, then you can ask from the buyer's perspective, set a lower price for it and thus earn more in the long term, but also from developing a local economy and creating new jobs and thus adding additional boost and benefit to the locals.
So if, let's say, and I understand you right, let's say if there in Baltics will be new, like serious and good companies offered, sure, you have a lot of so-called dry powder to jump in and to participate. Of course, you said valuation and all this and business model, transparency and so on. So you're ready to buy a lot if there is good supply.
Yes, if there's a good supply, we're always glad at looking at it.
Yeah, so then companies here, CEOs, board members, surprise board members, do you hear it? Yeah, so there is a guy with money and that's easy in general, yeah, just to decide. Yeah, but I comment on that, I guess before the financial crisis in 2008-9, let's say the banks were so active that they were in all sectors, in senior debt and mezzanine debt, in somehow even in a capital by supplying, by oversupplying capital to the market. Right now we see different situation, and as we see the estimations and prognosis for this year, at least in Latvia and altogether in Baltics, personally I do not see that banks are so keen to provide credit to the market. I think so, and this is a good moment for other capital instruments to be used, bonds, equities, and so on, because banks are very, let's say, conservative. Then go companies. Actually, this is the natural need, because we can talk a lot that it's good to be in stock exchange and a lot of examples and so on, but the companies must decide why to be, not because the minister wants to do that. Naturally, it would be the companies want to get, let's say, additional capital. They go to investors, and that's it in general. And I hope that on one hand, this situation with the banks will improve. I hope that this will help for stock exchange to get new customers. But coming back then to the biggest investor, the biggest supporter of this Baltic market, to Hannes and EBRD, why you actually doing so lot good things for here in Baltics? Why you are actually supporting and sponsoring some costs of listing, yeah, for some companies, yeah? Why you are like supporting bureaucrats with some kind of advice how to harmonize Baltic market, to harmonize legislation? Why you are doing this?
I think that's an easy answer. It's because we are a development bank. So, but I would like to come back as well to first thank you, Raphael, for the promotion. What is the difference of privatization we have seen before and now? 10 years and 15 years ago, the state didn't face so much commercial risk in the state-owned enterprises. They were more or less working in one country, but through the deregulation...
Like monopoly a little bit, yeah.
Yeah.
Little bit, yeah.
Through the deregulation, the commercial risk for the state increased. Good example, as mentioned before, are the airline industry. Shrinking margin in some cases, and you have only few which are really standing out, which would be good IPO candidates. energy sector, we see much more competition in the energy sector than we have seen 15 years ago. That means if a company is privatized, the chance that it becomes a private monopoly is less than it was 15 years ago. So it's really a changing environment, and the same is true in the transport sector as well. And now the question is, what risk is the government willing to take? What risk it would rather prefer to outsource it by still having a controlling stake into it? And that, I think, has to be a very careful planned exercise. I think it's a very good initiative to centralize the state holdings within an agency, to have a very strategic approach in this regard. And that was our experience during the last 25 years as well in the various countries we have been active. We have seen that a proper developed privatization strategy is very much depending, do you have one champion in the country which coordinates the efforts and comes up with a clear proposal in this regard. Why we are supporting capital market development in the various countries, and specifically in the Baltics, is on one hand, I think you have currently a set of governments which are willing to use the window of opportunity to diversify the financing sources for the local industry. That is one thing. The second thing is, research has proven that a country which has a well-developed banking sector and a well-developed capital market grew much faster than the ones which only had a very well-developed banking sector. And I think that was forgotten for a couple of years. That was one of the reasons why the US recovered after the financial collapse quite quickly compared to continental Europe, where it took much longer than in others. So it has to be a balance between financing through the banking sector and financing through the equity market, which is what you learn in the first lesson when you're attending a business school and signing up to corporate finance, that you have to look for the optimal capital mix. And it's not only loans, it's a mixture of equity and debt capital, which you have to look forward. And what we also see is that the investor decision base is changing. It's changing from stock picking and active investment more or less to the passive investment style, so following indices. Smaller countries normally are not considered, but I don't want to repeat what I said before. And our experience in the various privatizations where we were participating, I was pre-IPO investor, IPO investor, or providing loans for the restructuring, we are quite positive, I must say. And what we have developed is more or less an institutional memory. So we research really what were the key success factors, why did a specific investment case not came through. Also, we had our bad experiences, but predominantly it was very positive experiences. And what I think is a key success factor is first, government commitment, a clear plan, and then selection of the companies which really qualify for something like a listing on a stock exchange. Not every company fits to a capital market environment. It may have more social impact by still being in the state hands. And I think here, we as bank, what we can offer is to share our experience and to provide support as far as possible. May it be from the advisory side or even more from the investment side, if it's the right investment case, of course. And to give you an example, we have invested since 1991, 2.2 billion in the Baltics, and we are off 700 million in Latvia.
So as I understand, for example, if our Baltic will be for sale in stock exchange, your bank, you can participate, as you participated.
I didn't see that. What I said is we will analyze the business case.
Yeah. Thank you. Yeah, Rafael, please, yeah.
Propaganda about EBRD, but I do have to say, being on the other side and representing the companies and interacting with investors, there is a clear expectations to have specifically EBRD because of their commitment to the region, not so much certain other IFIs which are also present in our region. But there is an expectation because not so much in the more developed, politically stable Baltic states, but in certain other countries in our region, it's good to have an IFI, which at the end of the day, apart from being owned by the US and Korean and Japanese and now Chinese, but also Western European governments. Also, you've got all the local governments represented in the shareholder, in the ownership of EBRD. So it's a good buffer for a lot of investors sitting somewhere in Boston or in Manhattan, thinking about investing specifically in Southern, Eastern Europe, that I'm gonna have somebody who is sitting with me on the supervisory board. If something goes wrong, I can use, so to speak, EBRD to appeal directly to the government. So we want EBRD to stay here. We don't want the Baltic states to graduate, like certain other countries have, including Slovenia, and then EBRD came back. Because you bring a lot of good things, and as I said, there is an expectation among the investor in the investor community. There was a question earlier about the ratings, and I don't remember, somebody sitting behind me asked the question on the. It's not required, but it's very much, by the way, connected with EBRD. This is very important for the credit story. That the company is in the process of obtaining a rating. It also depends on the rating of the sovereign. So it depends what is the rating of the outstanding bonds of the Ministry of Finance in the country. But in all these processes, and that's usually especially in Eastern Europe, I noticed, companies first, they graduate from just being dependent on the local financial institutions, meaning in our case, in our region, the usual suspects, Western European banks, because they own our banking sectors. Then they graduate to bonds, locally listed, issued, or in international markets. That is connected with obtaining ratings. And I think that the person who asked the question also added, it's a fantastic homework for the management to go through the process to face the rating agencies, because they are behaving like investors, right? And they ask all the tricky questions before you go and you consider an IPO. In all these processes, EBRD is superbly helpful, and they've got all these different technical assistance programs which are for free for issuers. So you can utilize them and do the environmental analysis, or utilize their help with the restructuring of the board, and that's free for companies. And I think that EBRD should be doing more of kind of marketing, that this is the kind of value added for them. But there is a lot of companies, obviously, who have gone through the process and who can testify to this. One other aspect that came up as well, by IPOing SOEs, by creating this equity culture, you also encourage privately managed companies. Look at Poland, it's very aspirational for a lot of entrepreneurs who are millennials and young Gen X entrepreneurs. They are in their mid-40s. They don't want to sell completely their companies to foreigners. So that IPO route is a very kind of clever solution for them to partially divest, enjoy the proceeds for the first time in their life, but then stay and manage and still control those companies. So this is one of the kind of spillover effects when we IPO the big SOEs on the local exchanges.
Yeah, we have some hopes, and as far as I know, from companies in Latvia, that are those young entrepreneurs and modern thinking people. Yeah, that's sure. Okay, we have talked a lot here, but you have listened, I think, very well. And I think that you have maybe some questions. We can talk and talk. Okay.
Thanks. My name is Justinas from Nasdaq Vilnius. Thanks for interesting views. Just a couple of words about the Lithuanian market. So on Lithuanian market, we currently have 5 listed SOEs, but on the other hand, we have a slightly different problem there. Too little of their free float is available, from 2 to 3%. Only one of those companies, Klaipėdos Nafta, Klaipėdos Oil, has from 17 to 30% of free float, depending on how you count. And actually, this company busts a bit this geopolitical risks myth. So as we know, so it's currently SOE which has the highest free float on Nasdaq Vilnius, but it didn't prevent, for example, to build an LNG oil terminal, Independence terminal, because there is some fear among the politicians in the current geopolitical environment that, if an SOE does an IPO, there can be, some unfriendly investors that can preclude, a strategic project. So Klaipėdos Nafta busts that myth. But maybe on the question side, definitely we heard like 100 reasons, for an SOE to do an IPO, and it seems pretty straightforward story. But maybe to pick up a bit on last Hein's thought, also, our politicians are discussing, perhaps that some SOEs, have predominantly public functions, or that, they should continue some, unprofitable public functions like railways, continuing some routes, some unprofitable routes, or that, electricity prices should not be commercially based to keep the consumers happy. So maybe, Heinz, starting you, maybe you could elaborate a bit, what are the main qualifications where you would see a business case for an SOE to really opt for the IPO route, and whether, some sectors and some SOEs are more natural candidates, in your opinion, than others?
I brought a very good example today in the morning or in the afternoon, sorry, where the French government decided to privatize the airport in Paris, which is really a step which was from nobody expected, because it creates revenues. It's one of the most prominent airports in continental Europe. But at the same time, the reasoning given by the government was very plausible. They were saying, okay, we know that's a traditional asset. It faces a lot of competition, and at the same time, we have to secure the future tax income for the country, and we will use the proceeds of a privatization to put it in an innovation fund to promote artificial intelligence, robotics, and other innovative technologies in France to get companies into it. We have currently the pleasure of working with Latvian ministers in due course on SOEs, with help of the European Commission Structural Reform Service Program, which will have a closer look what are the options for various state-owned enterprises and what is the opinion of the government to going forward. I think it's a little bit too early now to differentiate from the company side, but I think that is a very welcome next step to have a very strategic approach how to handle state-owned enterprises and which one may be put forward for IPO privatization, maybe for a strategic sale, or should stay in the hands of the government. And I mentioned something before which is very important. Time is more important than money. It has to be planned very well. It may take a little bit longer, but the outcome may be much better than to rush forward and have a failed IPO, and everybody will be disappointed. So I think that's very important to keep in mind. I think there is a large appetite for state-owned enterprises nowadays, even in a competitive environment. Port of Tallinn is a very good example for it in the region. And I think various governments will follow the same route. And nobody would have expected, under the current circumstances, an IPO in France. So I think that is a step-by-step approach. Analyze, define the strategy, and decide which assets and which one you would like to keep. Still a blocking minority or a blocking majority, whatever it will be.
Can I add one point to this? The company which is selected, SOE selected for privatization, for flotation, for listing, doesn't have to be a star performer. There's a lot of pension funds which are looking for dividend yield. They're looking for sustainable flow of dividends. The business doesn't need to be exciting at all. Thames Water, the water utility in London, is owned by Canadians and Kuwaitis. It was owned by Australians before. Electricity in London is provided by a French company. Heathrow is owned by Spaniards. Half of British Airways is owned by Spaniards. And airline is a utility for me. Banks these days, we just mentioned, they're overly regulated. They are utilities. They're no longer banks delivering ROEs of 20+%, right? They're overly regulated. That's why they're so careful and conservative. But just to give an example, the key point is that we don't have to look for the star performance in our economy. And the last point, because the innovation fund, I think and I don't want to overly advertise what the Polish government did, but what was behind collecting partially some of the proceeds for privatization and establishing that PFR entity, like a little sovereign wealth fund of the Republic of Poland, was that for the time after, when a lot more Eastern European countries like Ukraine, maybe Turkey in the future will become the members of the European Union, Poland will not be receiving so much subsidies from Brussels as it benefits now. So for the future, we need to establish some kind of fund which will help us to provide dividends for future generations. We don't have natural resources, so we cannot establish the Norwegian sovereign wealth fund, right? But we more can follow the kind of Temasek model from Singapore without natural resources, but to find some other ways of generating the inflow of funds for future generations. And by the way, the last point, sovereign wealth funds are probably the best managed SOEs.
Can I add something in addition that I wanted to just add that, well, the product doesn't have to be exciting to make an IPO. And actually, the good company, it doesn't mean good investment. So good investments are defined by other criteria. So if the company has sexy product, doesn't mean that it's going to be a great investment.
Good afternoon. I have a question. My name is Dins. I work in healthcare sector in Europe, probably especially in Europe. Healthcare sector is not sort of the natural target for privatization, and more specifically, if we would look at tertiary level or university hospital sector. Nevertheless, the respectful panel in front, probably you have any experience in our part of the world or reflections. Since there are a number of problems we experience here and probably some other countries as well. First is balance care for the patients and financial sustainability. Also, if you look at healthcare, the planning should be long-term because of different reasons. However, the changes in political world means that planning is fairly difficult. So my question would be, do you have any reflections, ideas? Would that be also a potential target in certain circumstances for privatization, at least partly? Sort of the tertiary level hospitals, specifically.
Experts seem to be surprised.
We were allowed to ask any question, I understand. Yes.
Yeah, sure. Hannes, you or can you comment on that?
I'm going to volunteer. We obviously are not experts, but this is probably one of those specific sectors where you need to think twice what to do. I think that it is, and I strongly believe, always a good idea to go to the stock exchange just to have that optionality for additional source of funding. So you not only rely on the local markets and on the local financial institutions and to float a minority stake, okay? But you are talking about the very kind of specific sector. We obviously are more familiar with the generics and the usual pharma companies being the Kirkas of the world from Slovenia, or the Polish companies, or Gedeon Richter, etc. from Hungary. So these are the kind of more straightforward models where people understand. I was always told by my healthcare specialists that healthcare specialists are sitting in Japan and California. Nobody else understands healthcare, maybe parts of France and Switzerland. But this is a very specific. I was a part of the project a few years ago about utilizing real estate on the border between former Yugoslavia and Austria. and to redevelop those big socialist resorts when people used to go turnus after turnus, and to redevelop them with certain pension funds and healthcare companies from Germany, so that to open them up for future retirees from Austria for Germany, but also from Eastern European markets. So this could be something similar, because I think that we are experimenting with these models now on the Baltic Sea, right? We don't offer them the weather, but we offer the long walks on the beach along the Baltic Sea, and you can breathe in your yacht with your dog, and that's very good, and all the medical treatment. So we do that, and there is a number of companies in Poland that probably offer good examples of developing that model, so that you don't have to reinvent it from scratch. But I just volunteered off the top of my head. Very difficult without knowing the specifics.
Yeah, thank you. The thoughts that were going through my mind, and why the question, listening to the debate, was there are a number of things in that balance. One is sort of serving the local people. Then there is the open healthcare border, and how to encourage that. Then there are incentives, work in the public sector or work in the private sector, and how to keep the workforce. Also, how to ensure strategic planning, and, as I already told, not be so very dependent on certain political change and so on. So thank you.
Well, for me, this all sounds more like a PPP, non-listed project. Would we be willing to invest in it? Not sure. Because, well, BRD maybe. Because, well, then also the usual questions arise. Well, what happens if the hospital does not pay to investors? Well, how we deal with it? Do we like close? And then you have like headlines in media like Latvian pension funds closing that hospital or kicking out those doctors or whatever doing. It's a kind of very tricky situation.
I can add from M&A perspective that healthcare is a very demanded industry from private equity funds. Sure, and if you look at the transactions here in the Baltics, they are. In general, I think because of very poor development of state-owned hospitals and system in general, private hospitals are doing excellent. They are, of course, niche players and different models, but they are bringing excellent returns to the investors, and this is driver behind. Of course, there is a question in general, state's money goes to state-owned hospitals. Partially right now, the state-owned money in Latvia goes as well to private hospitals and private players, but there is a perception that it might change in the future, that finally state will subsidize state-owned entities, not private. But that's, I don't know, that's a discussion. That's my point on that.
Hi, Vladimir Loginov, head of privatization agency. So first, a proposal. I guess what we would appreciate EBRD and maybe also RAIN is you could play a big role in actually persuading the government to diversify from the SOEs. It's quite difficult to get off the dividend flow that actually is improving the budget deficit, and you can spend it by investing into something which will not generate cash flow maybe initially, like the French idea. I think something of that aspiration is needed to make sure that there is an appetite to offload some of at least minority stakes in the SOEs. Otherwise, it's quite difficult to get off that bus, so to say. And then more of a question and invitation. So if you have any other word for that P word, we would appreciate that. We're changing the name this year probably, so any ideas are welcome.
Maybe in Estonian language, that will be...
Maybe. Would be quite difficult for us to pronounce it.
Like, for example, IPO agency.
Yeah, that was more like remark, so some rhetoric question. Some questions more, please. This is unique opportunity. those guys came for you specially? If not yet, then later with coffee and with some meal. So thank you to everybody. Thank you for you all that you came to Riga. Thank you for all that you have done and you will do here. Hopefully a lot. Paldies visiem. Tad pie darba.